Hello and welcome to BQ Prime. It's a good morning, and you're watching us today in conversation with Kapish Jain, the Group CFO of IIFL Finance. And as we know, IIFL Finance reported a strong set of numbers yesterday, and Kapish joins us today morning to go over some of them and tell us a little bit more about what's the inside strategy at IIFL Finance as they look forward to financial year 2024. Good morning, Kapish. Thank you so much for joining us.
Thank you. Pleasure is mine.
Right. So let's just jump right into it. I was looking over IIFL Finance results last night, and there seems to have been good growth across asset segments, right? Home loans have grown, gold loans have grown, and microfinance has also grown pretty sharply. How do you see your asset mix evolving over FY24? Is there a sizable change in the asset mix that you're looking at over the next financial year?
Thank you, Jaspreet. Thanks for the nice words. Our asset mix, if I have to go to that, we are focusing on few core products, which is all linked to retail. We have 95-97% of the retail in the entire portfolio. So that strategy won't change. Going forward as well, we'll be at the same level. And on the overall mix, the mix would not vary too much because each of these markets have opportunities. You mentioned about gold, you mentioned about housing. Each of these markets are fairly performing well and are hugely underpenetrated. With the kind of build-up that we have done with regard to branches, with regard to capital infusion in some of these businesses, and also the asset-light model, the way we maintain, where we do sell some of these assets. These are very, very high-quality assets, pristine assets, and we have sold them into the banks under priority sector. Many of them qualify under priority sector, or they are zero risk weights. So with that kind of business arrangement that we do under asset-light, and the opportunity that we see in these markets, we should be able to grow our segments on a similar trajectory going forward as well. The share could vary a little depending on the opportunity.
Right.
For example, and to illustrate, gold has huge dependencies on the gold prices. If the gold prices do not hold, then you can't take over risk and over leverage on the customer because that's the only asset that you hold as a security. So if the gold prices remain stable and they perform well, we should be able to get to a growth trajectory like we have done in the past. In the past, purely on the gold business, we have grown at a CAGR of 41% in the last 5 years.
Right.
I'm not saying we're going to grow at 41%, but we see a good opportunity, and we should be able to grow at a range which is similar to what you have seen, maybe in the teens, in the 10 to 20% range, or a little around that. And it can just move even higher if the opportunity continues. We'll give you that window.
Fair enough.
On the housing,
Please go ahead.
On the housing business, similar to gold, it's hugely underpenetrated. Now, whom am I tapering to? Whether it's microfinance, whether it's gold, whether it's housing, we are tapering to somebody who's in the lower strata of the entire pyramid. Any data would suggest that only 10% of the population in that strata is getting credit.
Right.
The topmost population gets the highest credit. People like you and me, there are enough and more people chasing us for lending. But people in that strata are not. There are not too many of them who are getting credit. They're still like 10%. You need to identify that customer who can still be levered and can be lent. There could still be a population there which cannot be lent for their own performance, for the unsustainability of their business. But given that it's just 10% penetrated, there's a huge pocket there where you can give your lend and yourself. Provided you have good credit check, you have good check on your credit and bounce rates and all. With that things, you should be able to grow. We've added a lot of branches. We added close to around 150, 170 branches in the housing space from around to around 370, 380 around branches for now. We've added close to around 300, 400 branches in the gold space in the last 1 year, and even higher if you go 18 months back. With that kind of branch expansions and more in tier 3, tier 4 cities, which as I mentioned is very less penetrated compared to the overall market, we should sustain ourselves on a growth. And growth mix will change plus minus few ranges depending on how the market behaves in this period.
Okay, I just want to talk about two specific segments here: home loans versus unsecured personal loans. We've seen at a systemic level that personal loans have stayed very, very buoyant. They've continued to grow at a quick pace, whereas some TransUnion Civil data indicates that home loan inquiries have started to reduce a little over the last quarter. How do you see that playing out for IIFL Finance? Are home loan inquiries likely to remain as strong as they were last year? And similarly on personal loans, what's your outlook?
Jaspreet, you're right. If the rates go up by around 250 basis points, it's going to hit pocket for anybody, right?
Right.
Home loan, your EMIs are capped to the tenure under which you can price the asset to the customer. His serviceability should be there for the period for him to pay the EMIs.
Right.
With that, you need to make sure that either you need to increase the tenure of the customer when the rates go up, or you increase the EMIs for this customer, both of which would have a limitation.
Right.
Because you can't over leverage yourself on the customer. Fortunately for us, our loan to values have been at decent range, and
Mhm.
therefore we are able to pass on the rate hike that has happened so far. Right?
Right.
But the market still has opportunity. The good part is, as you would have seen our presentation as well, the affordability index for the housing space is at
Hmm.
all-time low. People
Right.
income levels have gone up far higher than what their uh, uh, pinch on the pocket is, and
Mhm.
therefore we believe if you actually identify the right customer and make yourself present into those markets, you will be able to sustain these challenges and grow.
Right.
The key is being operative in the niche market where you see that window to grow and make yourself more available to the customer.
Okay.
So yes, there would be this data which is generically suggesting that there are certain challenges, but you need to
Mhm.
slice the data more to understand: is it more talking about the urban market, is it more talking about the semi-urban market, or the rural market? As you
Right.
go into the hinterlands, you will see that that proportion would be lesser in some of the hinterland market than in the prime market.
Right. And your outlook on personal loans,
On the
similarly?
personal loans, just read personal loans is not too big a market for me in the sense
Okay.
it's a small base for us, and a small base is also going to grow with that small base only.
Okay.
It's not too significant a share on my entire book. I had a 64,000 crore book. It is not even 5%, or it's little
Mhm.
around 5-6%. It will continue to be on that range. Uh,
Okay.
and we for us there, as it is not just the NP which is prominent. What is more prominent
Right.
there is your PAR numbers, which is anything 1+.
Yeah. Yeah.
So are the customers getting delinquent early? Are the customers are having bounce rates, which is huge?
Mhm.
And with that, you will see quarter on quarter, we have been able to even hold back.
Right.
It's not that I've grown unprecedented in that space. There have been quarters
Mm.
where I've really helped myself. It's primarily because we've gone back to the drawing room and seen our policies again. You have
Right.
seen an announcement yesterday. We have hired somebody senior in the digital loan space,
Yeah.
who come with plethora of experience.
Right.
The gentleman is also coming with a lot of this knowledge where we're going to build it and to make sure that our credits are well monitored and we have a right pricing as well. Pricing is important.
Right.
If you
Definitely.
right price the asset, you can take care of the credit risk cost as well, because that's the only way
Mhm.
your risk-adjusted return is going to come on the book.
Understood.
So on the
Understood.
personal loan, we will continue to be watchful, and
Yeah.
the opportunity is there, and with the watchful approach, we should be able to sustain the growth that we are talking.
Okay, understood. Now, given the conversation we've had on the asset mix, your outlook for it, how do you see net interest margins changing over the next financial year? Do you expect some pressure on it? Because there is conversation in the broader financial services ecosystem that names may be peaking at this point or be close to peaking at least.
So when interest rates start rising, yeah,
Yeah,
they don't rise at one go.
definitely.
MCLRs grew by 250 basis point. The repo rates went by 250 basis point. MCLRs went by around 125, 130 basis point.
Hmm.
But they all happen gradually. There are
Right.
anniversary rates of your borrowing at which the rates go up. So not all of that comes into your P&L today. You've seen our
True,
cost of
true.
borrowing going up by around 30 basis point while the markets have moved so much. We've been
Yeah.
able to pass on our rate hikes to our customers. So for
Hmm.
that matter, one would say that globally or in general, the NIMs are peaking. Right?
Right.
For us, NIM is important and NIM is extremely critical. Uh,
Right.
with the asset mix, we will make sure that we are able to get to the NIM that we are targeting for ourselves. NIM is just not a factor of interest rates; it's a factor of other revenues that you get in the NIM. You get
Definitely.
the
Yeah.
processing fees from the customer. The processing fees also gets added to the NIM. So
Hmm.
with the volume growth that we have seen, our disbursements have gone up by 46% in the
Right.
last
Yeah.
1 year. You get that NIM you get that revenue from processing fees as well in your NIM. It's going to add a
Definitely.
lot. Last 5 years, CAGR growth for our retail segment is around 26%, which again
Hmm.
suggests that we should be able to get the volume. With the volume, we should be able to get to our NIM.
Right.
Uh,
Yeah.
we will be watchful on our borrowing. Our borrowing mix will further improve and hopefully should improve with the credit performance. You saw a
Right.
rating upgrade coming for the company in this
Yeah.
quarter. Yeah, Moody's upgraded our international rating. That will have an
Hmm.
effect on our ability to borrow from global markets. And
Right.
that pricing is important. That will also take care of some of our borrowing mix and borrowing costs. Yeah, so
Hmm.
while there could be some expansion in the borrowings, we're going to address it through borrowing through other newer markets where we have not ventured to just balance it out
Right.
and make sure that we're going to maintain our NIM.
Okay. And in your estimation, has the environment for NBFCs borrowing from banks changed considerably between, say, 2 quarters earlier and now? And what's your outlook for it going forward? Because there was some conversation about banks doing some sort of tightening on lending to NBFCs because some of them are reaching their internal limits on how much they can lend to NBFCs, right?
Yeah, so the banks are also growing. Their balance sheets are also growing.
You're
Their
right.
deposit
Yeah.
rates are going up, which means with the expansion in their balance sheet, while the limits they might be peaking, new windows of limit will going to come, right?
Okay.
Right. That's one thing is going to happen. Second, a big large player in the entire
Is
HFC and
exit.
CFC space is moving out from this space. They are getting converted into a bank. That will create a huge opportunity for others to leverage. And just like any lending institution lends only to the best in class and the best paid company, in the order or in the ladder of preference, hopefully IIFL will qualify there as a more preferred borrower with the kind of performance that we have seen, right? So there could be a limit, but then through turnovers and through change, we should still be able to get to our borrowings. So that's one window which we believe should get to our borrowing at a higher level from banks from where we are today, as a prioritizing with our credit performance. The second is we also see opportunity from other markets. Like I said, our international rating moved up. There are, and today in my borrowing mix, the share of capital market relatively is lesser, right? So and there's huge amount of flow which comes into these mutual funds and insurance companies, and they would also look for good credit profile. We are working hard. We are working hard with them to give them the right understanding on our businesses and get them. We got few issuances in March as well in the bond market through mutual funds. We should build it up further as well. So with these, we should be able to get to a good borrowing mix in a more balanced level going forward.
Okay, makes sense. Now, given the broader environment and you looking at FY24, are there any specific things that are exciting you about being at IIFL Finance in FY24? That, okay, this is what I wake up and go to work for every morning. This is the thing that excites me the most. Can you tell us a little bit about that?
So, as a part of the management team, we have few important commitments. We have few important commitments with regard to governance and practices, which is to our board and to all our stakeholders and other investors. That's paramount. That's something which is hygienic, which we can't compromise. Right. And that is zero tolerance. With that being there, being there, the other exciting elements is growth. You need to make sure that you are growing. You're growing with the right price. You're getting the returns that your investors are looking for, and you're growing in the right segments, which is more in the non-bank segment than in the bank segment, because you can't compete with banks because you're borrowing from them, right?
Right.
Other exciting pieces, having a team which is motivated and you work along and getting into new opportunities in which you can build yourself and add value. Adding value is so critical all the time, every time. Just like you need to get up and eat every day, you need to add value and make yourself relevant every day. And that is the most exciting part for anybody's job.
Okay, understood. I think this is a great summarization of what IIFL Finance is looking forward to and what it has been focusing on so far. Thanks again so much, Kapish, for joining us today morning, and we'd definitely love to have you back and see how IIFL Finance's journey evolves over FY24.
Thank you very much for having me, Jaspreet. Have a nice day.
You too. And thanks to everyone for watching. And you're watching BQ Prime. You can watch all such other conversations on our channel whenever you'd like.